I'm going to put it to you real simple. If your broker, your financial advisor, whoever you lean on, 401k advice and things like that, didn't warn you about what's coming up in the markets, what we've seen in the markets, particularly since the beginning of the year, it's incumbent on you to fire that person and find somebody out there that really knows what they're doing. You don't need somebody that tells you what already happened in the past week. You already know what happened in the past week. You need somebody that's going to look ahead to the months ahead and say, hey, here's the icebergs on the horizon, and here's what I see coming. It's not often that I'll do a video. I've probably done 15,000 videos across 2 channels over 13 years here. And I don't think in any single one of them I've ever said, I've told you so. Today, this is going to be I told you so video, and we're going to look at some things that pretty much prove the dynamic that I expected and started predicting last year, mid last year, summer of last year, that is finally coming true. And the implications for everyone are many. Number one, right? If you're on fixed income, Social Security, disability, things like that, prepare for the future. Number two, if you're an investor, you have to be prepared for the future. If you're somebody that holds a job, you're somebody that has a mortgage, you're somebody who's thinking about buying something, well, what are you saying, Rosie? It relates to everybody out there, what I'm going to talk about, because we hit a sea change this week that is unprecedented, well, in the last 100 years. And we're going to get into that today. And I'm going to tell you right now, if you're not subscribed to this channel and you're not getting notifications, and you're just depending on traditional thinking about politics, economics, social order, things like that, you're missing a lot. Okay? You're missing a lot. And I am begging you to be a part of it and understand this is a time not to have pride and, oh, I'm going to go it alone and I do my own. This is a time to have some advice, to have some sound reasoning, and to have some proof that verifies that what this guy's talking about is what has actually been coming to pass recently. I've done video, one was even called Your Life Will Change Dramatically a few months ago, and it will. Let's get into it today. Mid-April, beautiful weather. What could be wrong with the world, right? Well, a lot of things can be wrong with the world now. Back in August in particular, I really started to bang the drum about things that I were seeing that didn't make sense in the context of the way that markets traditionally work, particularly in the United States and in the West. And one big one that really caught my eye, even back $700 an ounce ago, so it seems like a million years, I kept asking myself, why is the price of gold so persistently rising? Why doesn't it act like a normal market, that it goes up a bit and then it comes down sharply and then it goes up some more higher and then it comes down? It had unusual market behavior in that it just kept going higher, higher, higher. Now don't worry about silver. Silver's a tag along. When the things hit the fan and people realize that gold is out of price, purchase-wise, for protecting themselves and their assets, well, of course, they're going to go for the silver, right? The poor man's gold. Well, there's a limited supply of silver, too, right? So don't worry, we're going to see the same things in there. But seeing that persistent rise in gold could be attributed to only one of two things. Either we were going to have inflation that was going to make the 1970s, late 70s, and early 80s look like a Sunday school picnic, right? Or there's something much deeper. There's a real 8.8 earthquake below the surface that's happening, right? It could only be one of two choices. That's it. It's either inflation or some kind of fiscal crisis that's coming. And I kept thinking to myself, well, inflation has its own cure because production steps up, right? Supply steps up, it cures itself. And we're at the point today where we have almost, inflation's down to about a 2% annual rate. Things are coming down, oil, lumber, grains, everything you can look at is coming down. Right, and it's been coming down for the better part of the last year. But what has gold done? It has gone from $2,500 an ounce to $3,200 an ounce, an all-time high, unprecedented. We used to think $800 an ounce was higher, right? And $1,500. We've doubled that. No inflation, which brings us to door B. It has to be some kind of fiscal problem coming up. And well, you've started to see that unfold since the beginning of the year, right? We're not talking about Einstein level thinking here. People say, oh, Rosie, you really sussed that. Wow, how did you put two together? You only got two choices, right? There's only two choices to be made there. So what are the ramifications when you when you have an outlook like that you finally throw your lot in with deciding, yeah, there's something big coming, there's something unprecedented, there's something going on below the surface that is unprecedented, and it's probably going to be calamitous, okay, judging by just the way that precious metals are soaring up in price. This is all really critical because you can have a theory that makes sense, but you need to have some validation to it. You need to have some underpinning to it. And before you tune in and think, I don't want to get into all this technical stuff about the Federal Reserve and the dollar, and that's a good part of what ails this country, the resistance to be educated about what's going on in the world. I would rather watch my little dramasphere, right, about who's going to court and who's stalking this missing child, right, and all this stuff. Then only when the stuff hits the fan and you're in a situation where you can't do anything, then all of a sudden it's, woe is me, why didn't I hear that this was coming? Because you're not going to, as I said before, you're not going to hear it from your financial advisor. You're not going to hear it from your broker. They have no idea what's coming down the pike. Their job is to sell and take some percentage of the value to compensate themselves for babysitting over your portfolio and holding your hand on the phone. They're not sitting there at home thinking independently about what's going on in the world. You got to get this through your head, because for most of us, our lives are going to be changing dramatically in the years ahead. If what I suspect is happening now really does come to pass in full fruition, it's going to be a major rocking event for a lot of people, with major adjustments and major changes. One thing's for sure, there's going to be a lot of lifestyles that are going to be brought down quite a few pegs in the future. Let's get back to affirmation or proof of what I'm talking about. Really, since I trace back to history, probably post-Civil War in this nation, right? Every time that we had some kind of fiscal calamity, right? Like post-Civil War with all the debt, the gold-backed dollar, and the Great Depression. Every time we were Panic of 1907, the Knickerbocker panic that I talked about, right? High interest rates just collapsed the market at that time. In each and every one of those situations, interest rates came down, right, in response to the crisis, right? During the Great Depression, interest rates, the call money, the Federal Reserve borrowing rate went from 6% all the way down to, 1%, 0.5%. Right? Why? Because economic activity was low, right? Nobody was borrowing money. Right. Everybody's business was impaled and people were scared to make major purchases. There wasn't a lot going on, economically speaking. So interest rates could go down. The government had no money. had no borrowing needs, had nothing to need to borrow money for. Of course, all that changed when FDR took office and had to do something to start feeding people and putting people to work. But we're not going down that path today. We're staying very focused on this. Don't lose sight of what I'm saying, that in fiscal calamities, interest rates went down. Let's now talk about 2025. And since the beginning of the year, despite all the expectations and all the professionals telling you that inflation's coming down, therefore interest rates will be coming down. Well, there's somebody that told you, no. Let's hold fire on that, right? And ever since really, we had that initial plunge, took us down to about 3.9%, even in the face of a weakening equities market here, right? Interest rates have been rising, right? Grasp what I'm saying. Think about what I'm telling you. In the face of distress for the first time, instead of going down, interest rates are now rising. This last Tuesday, Wednesday, overnight, this was calamitous. People were just starting to wholesale dump bonds, United States debt obligations. They were just dumping them into the market in overnight trading. And although the Federal Reserve and the Treasury Department will never disclose, right? They'll never disclose to you their open market operations, what they do, right? We know, Rosie knows, that they were in there buying the bonds and notes that people were selling to try to force the rate from going, or keep the rate from accelerating. It got so bad on Wednesday that if you look at this chart here, in mid-afternoon of the 10-year yield, you'll see that it was starting to move back to 4.6%, right? And all of a sudden, you just see this line straight down where it went to like 4.4. It was because the Fed was in there buying what people were selling hand over fist. How are they doing that? By just making bookkeeping entries, basically creating money to buy, creating more debt to buy debt, if you can imagine that. And the Treasury working in cahoots to them. And then on Wednesday overnight, I'm quite sure the Treasury Secretary called the president up and said, Mr. President, we got a real problem here. Interest rates are rising. People are freaking out. The stock futures are going down. You got to do something. You got to put oil on the water here. You got to calm the rough seas. And we had that be cool. It's a great time to buy. Right. And we had the rally, but on Friday, as the interest rates kept trying to naturally climb back up to higher and higher levels, surpassing the 4.5% and hitting almost 4.6%. The Fed is once again in there pushing hard to keep that interest rate down. When you say, well, Rosie, you could do that forever. No. Because as the fundamentals deteriorate and the news gets out, you're like the Dutch boy putting your finger in the dike because there's a small leak. No. There's only so long that can go on. And one time I'll tell you the story of the British pound trying to get into the ECU, the Euro system, and how that failed. This was a big day. This was a big week because it exposed for all the world the real weak spot of the United States is interest rates, right? If interest rates rise, right, in the face of declining economic activity, what does that portend, right? And what's the biggest currency in the world? What's held by more people? The United States dollar. And guess what the dollar started to do? right? Smart people, and there's a few out there. You always wonder why the big money makes big money, because they're not in there in the paper yakking. They're not on CNBC or CNN yakking and talking. This is going to happen. They're doing stuff behind the scenes, right? Why should they give themselves publicity about what they're doing? They'll do it, and then they'll squawk to the news. They're moving out of the United States dollar. We had the biggest drop this week since 2020. I mean, we're talking about a 5-year time period, right? This is the things that you have to be aware that are going on, the interconnection between these and what this means. And it's really a matter of, and if you think to yourself, well, okay, the budget deficits are going to come down. It's all going to be good. We've already just had the report for the first 6 months of the fiscal year, $1.3 trillion at that. All right, and if you look at this particular chart right here, you will see right now the Trump administration versus the Biden administration and the amount of debt that's being put on the national debt. And there's been no slowing at all. Right, we've put just as much debt on the Trump administration as we did, more than the Biden administration. And now when you have rising interest rates and you have to roll over this debt into higher rates, guys, it doesn't take a rocket scientist to say, yes, you have some kind of fiscal disorder, right? Some kind of potential calamity here, right? People say, well, it all has to do with the tariffs and this and that. Look, I'm identifying this. Well, they're still running for office in August, right? While Biden is still running for office back there in August, right? This is well before President Trump gets in there and gets elected and then starts talking tariffs in late January. Just get the message. This stuff's going on long before we have the tariff talk. So people think, oh, you're crazy, right? The tariffs have done all this. No. The tariffs give that extra push of destroying business at the very time when we need the maximum revenue to the United States government. We're doing all these things that impede and worsen the problem of budget deficits. No matter how much you cut, if interest rates are rising, because of perceived end of the line of financing unlimited debt. I mean, it's a very beautiful thing that the United States could borrow, interest rates down when times got tough. I compared it to being able to having a well and dropping that bucket down at the bottom of the well every time you needed to put out a teeny little campfire, right? Now, last week, you lower the bucket down and the rope snapped. Right. Well, our little campfire is starting to rage into a conflagration here. Now, I'm not saying that things are immediate. I'm saying the cracks are there. Right. And we also have this situation now where, okay, we're taking the tariffs a blanket. We're taking them down to a blanket 10%. Yay! I'm happy about that, right? Right. But now Apple comes along and says, "Oh man, our 140%, 145% tariffs on China. We make our iPhones there. We make our pads there, right? People going to pay $250 for a phone? I don't think so." All right, I'll tell you what, I'll wipe that out. We'll give you an exemption from it. Well, what happens Monday when the automobile manufacturers come and say, well, what about our parts? What's wrong with us, right? Why does he give us the break? You start to have this exceptionalism that just, the message it sends is you're not in the greatest control of what's going on. Right. And remember, I'm a very apolitical person. I'm an independent, right? I call out crap on both sides of the aisle. But I'll tell you what, when you're just flying by the seat of your pants, you're liable to hit a couple walls. Right? So I tell you, now we start to see the affirmation of, yes, this is the picture that's coming together. And the implications are going to be many. right? And of course, people say, I can't sell, I'm down, I'm down 5% or 10%. Well, I'll leave you this. What if you're going to be down 80% or 90%? How would you feel? In other words, people can't do the right thing at the right time, right? Because they've been conditioned against it. And the biggest thing we have going against us now is this buy and hold mentality that's burned in the last 40 years. That's going to have a lot of people just going down with the ship here. It's not going to be next week, But I'm saying, if you think the path of business, and if you think the business of the United States is business, we got some big business problems coming up. We have too much debt, $1 trillion of student debt. We have automobile loans that are blowing up. You say, but it's good. People got their houses and stuff, and I say the housing market's going to weaken dramatically, right? I've already seen tremendous signs. You look at the leisure and entertainment stocks; they have been hammered to oblivion. The cruise stocks, right? The Norwegian cruise lines, the Carnival cruise lines, etc., Princess, all that stuff. Hammered. Las Vegas casinos and hotels, absolutely hammered. Multi-year lows here. Right? Big stuff is coming, folks. Big stuff is coming. And just because it doesn't happen in the flash of a moment, well, it takes a long time to change ideas. It takes a long time to breed panic and to cause disorder. And, well, I can leave you with one final thought. We've looked at a lot of charts and things like that. But just remember, you're in unprecedented times when interest rates are rising in times of economic weakness. What that basically portends is welcome to Venezuela American style, right? With crazy high interest rates and just ridiculous. Well, I don't even want to go there for this particular video. But let's just cap it on this. I say once again, if nobody told you what was going on, I told you what was coming down the pipe, right? And gold, silver, telling people recently, buy the Swiss franc, that's going up, right? You tell people what to do, but people just sit there and almost comatose and unwilling to do things to help themselves, because we're so used to government being able to, big daddy government will bail us out and no worries. I hope that's the case, because I suspect that the budget deficit going forward is going to be something that's absolutely mind-blowing, and there's no amount of borrowing in the world that's going to be able to close that without having a profound effect on borrowing rates. Do you give a drunk spender unlimited credit at the bar? Sooner or later, you got to cut that bad boy off, and that's a bad day, right? There's been a lot to chew on here today, and I want to tell you once again, don't listen to people that tell you what already happened. Listen to people that tell you what's coming, so that you have time to prepare yourself and protect your nest egg and your financial resources. All right? The only thing I can do is tell you what I've always said. Subscribe and hit the bell for all notifications. You have a lot of people, I hate to hear that stuff about, it's a Debbie Downer, and to which I say, good, go bury your head in the sand. And then come to me later and say, what do you think I should do now? Well, let's start by getting your head out of the sand. Right? We've already talked at length about how democracies, people vote themselves treats from the tread. They destroy their own nation. And it's no different here. You so overburden the engine of forward progress in this nation that it can't help but just stop. And worse than that, it starts to go backwards. It's always this belief that we can do anything borrow anything, buy anything, start any program, spend any money we want, even on healthcare for illegal aliens, no problem. And then wonder why we have 300,000 people crossing the border, right? In a month, during the peak of this crazy open border stuff, of which I've never heard no person's ever given me a defensible reason why a nation shouldn't protect its own borders. You know, try sending 300,000 people streaming from Vietnam into China, right? That'll be a sight to behold. Anyway, guys, once again, subscribe and hit that bell for all notification. We'll have much more to say ahead. Enjoy your Easter week this week. I know I sure will. And take time to think about the reason for the season. And to my Jewish friends out there, happy Passover to you, and happy Holy Week and Easter coming up for the rest of you. I really hope that you have a wonderful week. I think all will be well over the next couple weeks or so. But let's just say the die has been cast. All right. Thanks for watching, everybody. Thumbs up are appreciated.